Well, tomorrow the Prime Minister sits down with some of the country's most powerful business leaders who are expected to press Julia Gillard to cut red tape. The meeting will be conducted amid increasingly dire warnings about the manufacturing sector from both unions and employers. The government's response is more regulations, which it says will give local business a fair go at benefiting from the resources boom. Political correspondent Tom Eagleton reports from Canberra.
Bosses and workers are joining together to tell Canberra what it already knows. Manufacturing is slowly being starved.
We argue that we're at a point where there are very real risks of a permanent loss of capability, particularly in manufacturing where capabilities are so hard to rebuild.
In fact, this is the worst period for steel that we've ever had since we've manufactured steel in this country.
The question is what to do about it. Today, the government followed up on its promise to give Australian businesses the inside track on a slice of the hundreds of billions of dollars being poured into building resource projects.
This is an endeavour by the Commonwealth to make sure that Australian businesses get a fair go.
Unions claim in some projects up to 90% of the work's going to foreign companies. Now the government's tightened rules for resource project investors,
including reporting to the federal government about the way in which Australian businesses are being given opportunities to participate in those projects.
The minister's shrugging off concerns the new regulations will reduce international competitiveness.
We do not think it will place an extra regulatory burden of any consequence on the companies that are involved in the projects themselves.
But it's the high Aussie dollar that's really hurting local manufacturers, leading some to think out loud about ways of lowering it.
Well, it's of course not my position to be commenting on what interest rates should or should not be.
Well, I'm not a Minister of the Crown like Mr Conde is.
Mr Howes is calling for a change to the Reserve Bank's guiding principles to take into account the value of the dollar after the bank failed to cut interest rates at its last meeting.
I believe the RBA has made the wrong call. I think that the manufacturing industry, in fact most homeowners in this country, need a cut in interest rates. We need a cut in interest rates so we can get some downward pressure on the dollar.
The call to change the bank's rules has some scratching their head.
Fundamentally, the Reserve Bank doesn't have that many mechanisms available to it to control the Aussie dollar.
Others directly attacked Mr Howes.
The Reserve Bank has done a better job than any other central bank in the world. To tinker with it now and to argue, as Paul Howes does, that there's something wrong with the process just shows how out of touch he is with economics.
I suppose in his world would be the ANU, which I didn't realise the university in Canberra was the real world.
We know from the 70s that if we let the unions drive policy, you end up with very high inflation, you end up with policy eventually being pushed to extreme levels, and you end up with a major recession.
I think the RBA needs to listen, not just to academics at the ANU in Canberra, but to ordinary, decent, hard-working Australians.
A couple of different business groups are backing Mr Howes' call for the Reserve Bank to drop interest rates at its next meeting. And if the power of lobbying doesn't work, well, financial analysts say the latest round of economic data should prove more persuasive. Tom Eagleton, Lateline.